conduct.
Oh my God! Okay, it's happening. Everybody stay calm.
What's the
Everybody
procedure,
stay calm.
everyone? What's the procedure?
Stay calm.
Wait.
Everybody just calm down.
That's exactly what it feels like right now. But we're going to dive into a clip from Raoul Pal and his massive claim about global liquidity and how all this could be noise and that we could still be in for some massive upside. So if you haven't gotten shaken out and you are eating your popcorn, watching this play out, and you have applied the don't fuck this up thesis without leverage, and you have a nice bag set aside, then this can be a great opportunity. So stay tuned. Crypto chaos got you spinning, watching the next meme token skyrocket while you're still trying to figure out your next move? Flapjacks brings clarity to the chaos with deflationary burns, fitness-driven utility, and a syrupy community that sticks together. This isn't just another token, it's a movement. Why stress when you can stack? Flip the game with Flapjacks at flapjacks.xyz. Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. I love using the Watch Your Guru headlines because it's just a bunch of short bullet points of basically doom and gloom for the last couple days. The back and forth trade war kind of rhetoric between China and Trump, and then how all the other countries are being affected by it. 2 trillion being wiped out of the stock market. Basically President Xi saying they're not going to back down. Then 104% from Trump. Apple taking planes full of iPhones out of China. All sorts of just craziness. Like, there is no one safe, and it feels exactly like Chicken Little out there.
The sky is falling! The sky is falling!
The sky is falling!
Are you crazy?
So, personally, like I said, I feel great at this stage because it's such a different feeling from where I was in the previous cycle. And it's because of, one, I was, like I said multiple times, chasing shitcoins, and I didn't have the understanding that you cannot gamble your way to wealth. 2, I was over leveraged. So I bet big on Tom Bilyeu. He shit the bed and I lost 50K with his project, and then another 50K with Animal Farm and Drip. So even though I have not recovered all of that, I took that as my lessons learned. I got my PhD in crypto, and it was well worth it because now I understand how to play the game. So that was my 4 years of paying the school of hard knocks. And it's like, well, I can't complain at this stage now of where I'm at. And I'm gonna show you guys that actually how I'm tracking this, because I'm looking at my bag in Bitcoin terms, not in fiat terms. And that's why I know I'm up. But let's first jump into the clip from Raoul Pal. In here, he was discussing with Jillian Biddle, who is his one that I don't know what his title is, but he helps come up with all these charts and does a lot of the research. So he is no stranger to the macroeconomic framework that Raoul Pal is using to explain all this stuff. So we're gonna mainly focus on what's going on with China, because that's the big news and everybody's wondering how it's gonna affect their
It's time
bags.
to finally try.
Plays out very similar to the cyclicality now. That cyclicality is the debt refinancing cycle. So in this stupidly colorful chart that nobody can read, and if you're colorblind, you're totally fucked. But imagine you could see it. You can see all of these colors, and basically each color is a year. And in liquidity terms, these are broken into seasons. So we're currently coming into the fall season, or autumn if you're not an American, because fall sounds stupid because of what leaves fall. I don't know. But anyway, the autumnal season, and it's a nice autumnal color on the chart if you're not colorblind, is when you tend to see the main debts roll. So we've got about 9 or 10 trillion of debts to roll this year, and you need a large increase in liquidity. The last cycle, 2020, most of the liquidity actually came earlier because of COVID, but generally speaking, the liquidity cycle is this year. So we're expecting an expansion of liquidity. Now, there's various proxies for liquidity. Global liquidity is the important one, but it lags Global M2, which is a faster reported series. Global M2 is driven a lot by the dollar, plus all of the private sectors and the government sectors around the world. So we found that these two have been really what matters. So when we think, now these are global numbers, everyone gets confused. The Fed are going to cut rates. It's irrelevant. It's irrelevant. It's this global liquidity that pays the global debts. Don't forget, 50% of the entire world's debts are in US dollars. That's one of the things that Scott Bessent has been talking about. Steve Merrin's ideas are about trying to reduce that. Good luck to that, but that's what it is, and it's the global cycle. So we know that the dollar is weakening. We'll talk about that later. That's a big part of this. We know that interest rates are coming lower, which is part of global liquidity and also part of financial conditions. We know that the US has been using a drawdown in the reverse repo and the Treasury general account. It will rebuild because of tax season coming now, but generally the US is injecting liquidity. It will not use the balance sheet yet, but it may well do later in the cycle. We need to see. But
So for me, this is what keeps me, like I said, kind of grounded. And I do not have the experience that Raoul has. And what's interesting about listening to him, he is a macro hedge fund guy, comes from the macro financial side of things. And Scott Bessent is as well. He's a Secretary of Treasury. So I believe the people that are in the administration now, like, it may not look like it and it may not feel like it, but these are all macro financial kind of looking people. They're not all just from government. They come from the back of house, so to speak, making money and understanding how markets work, be that good, bad, or indifferent. They've been in the game with their own capital or managing capital, working their way up, and they understand that framework. So all we can do is kind of hedge our bets and say, okay, they don't want to go broke. They're probably going to do what they think is best and necessary to ensure that they come out of this ahead. What are the plays that they're looking at, and how can I capitalize on that? So Raoul goes back 13 years to show you these charts of how in the autumn season, because he said each one of these is a year, or the fall, liquidity is injected, and that's where you can see it spike up into fall and into winter. And then at the end of winter is when it comes back down, both times, except for, like you said, in COVID, but it's still in COVID. Post-COVID, we came back down in winter. So we are at that same stage here. So the main TLDR for all this information I put out here is, all you have to really ask yourself is, do you think that going forward, things will follow a similar pattern, or do you think it's going to be completely opposite? That's the main bet you're making. Is it going to be similar? If so, then place your bets accordingly. If it's going to be opposite, then you're betting against the trend. So, like, to me, it just makes sense to swim with the whales, go with the flow of the money, go with the way that the actual framework has existed. And until we get out of the fiat Ponzi globally, until there is a sound money redistribution, this is the framework. And if that's the framework and that's the playbook, then it just makes common sense to continue letting that play out. So let's see how China comes into this from Raoul's thesis.
China bond yields. So if you remember, the US said, well, we won't ever get to QE until our bond yields get close to zero. Well, that's happening in China right now. They're in a full debt deflation. And China's going to be very important to this story. And it's the most important headline that is going to come is what the agreement is with China. So the agreement with China will be, and I've been talking about this for a year in Global Macro Investor and Real Vision Pro Macro, the agreement with China will be, you will agree to tariff terms. We will battle it out in public and make us look like we're all strongmen. You will agree terms because you have a dollar debt problem. The Chinese have a dollar debt problem, and they need to service those debts. The problem is the RMB is too weak and the dollar is too strong. They don't have the cash flows in a slow economic environment to pay for it. They know, the US knows, Yellen even went to talk to them about it when she was still at the Treasury. They need a weaker dollar. Now, the mechanism by which China gets access to those dollars is usually via the euro-dollar market, and it's Japan that is the big driver of the euro-dollar market. So when we look at the weakening of the dollar, I like to focus on dollar-yen to think of how this plays out. The yen is one of the world's big exporting economies, and it has a very weak currency. The yen needs to strengthen, and a strengthening yen and a weakening dollar will allow capital to flow into China and other dollar borrowers via the euro-dollar market. And the key thing that happens here is this chart of the Chinese currency against the yen. The Chinese currency was too strong versus the yen, and that has been putting pressure on Chinese exporters and the Chinese economy. It needs to rebalance lower, and this head and shoulders top and this head and shoulders top tell us the US, Scott Bessent, is going to get what he wants, which is a weaker dollar. A weaker dollar will stimulate global demand. It stimulates and allows for the rolling of global US dollar debts. It allows for exports and imports to free up. It allows for the movement of trade, even with tariffs. It's a very big deal, the dollar weakening. And if
I'm going to pause there and see if I can offer some additional clarity and simplify all of these financial terms. Imagine for a second that the world the world economy is a giant house party, and everyone, all the countries that have been invited, have been getting free drinks or super cheap drinks, going up to the bar, getting on a tab. They haven't had to pay the bill, and they're just like, yeah, just keep it coming. And now all of a sudden, those drinks or those bar tabs are coming due, and no one at the party has any cash. But the bartender, which is the US in this case, the US dollar, I should say, is charging super high prices for more and more drinks. So this is making it hard to keep the party going. And then some guests, like China and emerging markets, who borrowed heavily against the dollar or have the most drinks or have been drinking the longest, they have to figure out a way to roll this over or keep this party going, so to speak. So let's just say behind the scenes, the host, which is the US, they invited everyone there, and the US dollar is the bartender. They decide to meet with some of the key party goers like Japan, China, Europe. They all go in the back into the kitchen. They say, man, how can we keep this party going? How do we ensure that it doesn't crash? They say, let's water down the drinks a bit. Let's make the alcohol go a little further. Water it down. That's weakening the dollar. And let's also offer some free shots that would be injecting more liquidity. And then they agree on the prices, and no one leaves the party, and people just stay high on their own supply, get drunk, kick the can down the curb. That's the simplest way I can explain what Raoul is talking about. And this happens cyclically, as in the chart he showed, every 4 years since 2008. That's why, again, I like listening to him, because he has wrapped all this up in a pretty little bow and given it to us. And it's up to us to figure out, again, simple question. Do you believe it's going to continue that way, or has it changed? And then you place your bets accordingly. So I believe it's going to continue. And that's why I've been betting on Bitcoin. Let's finish up his feedback.
A weakening yuan against the yen, what it allows them to do is to compete. And that rebalances global trade and gets the global growth cycle going. So China headline risk to the positive side is the big one. Everything else is kind of noise, because this is the big rebalancing that the world kind of wants. Everyone has a trade-off here, and everybody will come to the table for a trade-off, even China. But of course, everybody needs to look like a tough guy in negotiations, but something will happen and we will rebalance and we can move forward. This is exactly what happened last time when Trump was in power in 2017. What we had was called the Shanghai Accord. It was a kind of public, not public agreement to weaken the dollar, to allow the Chinese to stimulate, because they need a weaker dollar to stimulate, because they don't want to weaken their currency via the currency band, because if not, you get a devaluation, which they do not want. So that was the Shanghai Accord then. The dollar fell dramatically and the Chinese stimulated massively. If you remember 2017, the Fed were raising rates. They were shrinking the balance sheet, but China and Europe stimulated. And that was via this mechanism. So this time around, we've got the Mar-a-Lago Accord, which is some generalized understanding that an agreement has happened. Now, I know this is all going to be complicated. Those of you who are...
So this is playing out right now in real time. Here's a simple chart showing the effects of a strong dollar against other currencies. So basically, if you're living in any of the other countries, it's like you don't want to hold your own currency. You would rather hold the thing that is able to get you a higher return and have your dollar go further. That is the reason why, as an expat living overseas, making money in dollars, I can live much better somewhere else because of literally the strong dollar versus other currencies. So in order for, like Raoul Pal was saying, for this to be refinanced, things to get shifted and just kick the can down the road as they've been doing every 4 years, we need a weaker dollar. And that's what he's saying is happening behind closed doors. And the main reason is because 50% of the world debt is denominated in dollars. Now, I believe this all playing out in real time, what's happening with what Trump is doing with tariffs and how we're seeing it affect the stock market and foreign, I think they said 40% of the stock market is owned by foreigners. So instead of them buying treasuries, they're buying stocks, and this is causing them to get out of the stock market. And then the remaining 60%, 90% of that is owned by the top 10% wealthiest people in the US. So all of that, I believe, I'm saying that just to say that there's going to be a shift in this global reserve currency status. It's taking people to see the amount or the effect that the US dollar has and how they can affect markets, again, with these executive orders and tariffs, and how it can just kind of create panic globally. So I believe by the end of this cycle, we will see more and more pushes into, what would you call that? I think they call it neutral reserve assets like gold and Bitcoin for other countries as well. We already know that BRICS was starting to leverage gold a little bit. They talked about Bitcoin, but nothing's really happened yet. But this, to me, is the signal that makes all of that move in that direction. Because anytime that you are heavily weighted towards one entity or another, and they can control the ebb and flow of what happens with your country, that's never a good thing. So I believe, yeah, there will be some negotiations and this will get fixed, but the long-term effects of this is that Bitcoin and gold will pop out of this with more and more of each country's capital trying to preserve their wealth or using it as a neutral reserve currency for their country. So the best thing I believe we can do, the not financial advice, is stack sats. That's why I'm going to pull up this chart real quick to show you guys. So I started tracking just balances in the different plays that I'm doing in Bitcoin and what that USD equivalent was based on the price of Bitcoin at these dates. So for me, I'm looking solely at this number. So I have 160% increase in my BTC value, even though from like last week until this week, my USD dollar value went down due to the price of Bitcoin going down, but my Bitcoin holdings have gone up. That's all I care about. My goal by the end of the year is to turn my status into a whole coiner status with this particular investment bundle that I have, in addition to whatever else I'm dabbling in or, you know, saving and doing things with. So this was all specifically focused on the kind of the crypto side, new investment thesis that I put out with you guys of where I was at and some of the old assets that I had from last cycle, blah, blah, blah. So for me, this is great. From 0.36 to 0.6 almost. And each week that is ticking up because of what I'm doing and how I'm dollar cost averaging and putting all my assets into Bitcoin savings, things of that nature. So I am excited for this opportunity, even though we're sitting here at 77 over on Binance. So for me, any dip below, and even if we do see some additionals, that allows me to pick up more Bitcoin with my dollar cost average strategy that I'm doing. I literally have a DCA going every single day of the week except for Sundays. And I've increased that since November. So this to me is just amazing. And the goal, once I have that whole coin status, is to be able to leverage the debt as I showed you guys. And I'll actually be doing another video because I did look into Coinbase a little more. They have a very simple, easy way to get a USDC backed USDC loan from your Bitcoin. I don't know enough about, I think it's Morpho or Morpheus, the lenders that they're using. So I won't be putting a lot into that, and I'll definitely try to do some more research on them. But that is the goal. So I'll keep you guys updated on that. All right. Hope that provides some insight from what Raoul Pal said. Let me know if you guys are panicking. You believe the sky is falling. You believe, you know, it's all over, downhill from here. The bear market is in. Bull market has been canceled. What are your thoughts? Are you still stacking sats, or did you try to sell off and hope to buy back in lower? I'm curious to hear what you guys are doing. Smash that HBO special, help brother out, like, subscribe, comment down below, and until next time, live daily and achieve your impossible. See ya.
Want to pay your in real life bills with crypto? How about send crypto directly to anyone with a bank account? Spritz Finance is a decentralized solution to be your own bank and connect your crypto earnings to real world bills and payments. They do not take custody of your assets and allow support on multiple blockchains and Web3 wallets. Sign up below using my referral link and you will get $50 back when you make your first $50 bill payment with crypto. Additionally, I will be using referral bonuses to airdrop, donate, or burn based on community feedback. Sign up now.